Good morning, Oliver. Good to see you again.
Great. So tell me firstly about NVIDIA here. We're still kind of within recent ranges, a little calmer move than many investors expected, but still down. So is that going to be an issue?
I don't understand the downtrend at all on the stock price. I'm a technology analyst, and from what I'm seeing, the leading indicators for NVIDIA are very strong. They had a big beat, obviously another blowout quarter. On the call last night, NVIDIA CEO Jensen Huang noted that the Blackwell delay, their next generation GPU that was being rumored about, was basically a speed bump. It's a spin to one of their mask sets to improve yield. It wasn't a functional spin, so the product is working fine. They're just trying to get better yield out of it. And they expect to ship several $1 billion of Blackwell systems in Q4. So that's going to be incremental.
Head of Research and CBC contributor Tom Lee. Tom, great to have you with us. NASDAQ, I should clarify, will only have gains if it continues its strong session today, so it won't be significant net gains. Tom, great to see you. Long time no speak. First and foremost, what's your reaction to how the market is processed NVIDIA's numbers? It, of course, fell initially in the pre-market. Yesterday morning, it was doing all right, and then it did close more meaningfully down by the end of the session yesterday.
Well, I think NVIDIA is one of these stocks that has become part of like a stock market lore. Almost everyone has a position, and I don't think the results and the earnings changed anyone's minds about AI and the central role it's playing in both global productivity, but also NVIDIA's role. But I think the sell-off tells you that a lot of good news was priced in. I think that's why the stock fell. It didn't take the broader market down. I think that was kind of a positive outcome, and I think it just shows you that there's room for a lot of rotation, and I think that it's revealing that small caps is one of the groups benefiting from that rotation. And so I think the NVIDIA results plus the Fed in September is really the catalyst that is going to get some investors to actually follow through with the rotation.
Lofty expectations. Down as much as 7% right after the earnings came out.
Down to
right now, I'm looking at a stock that may be down as little as $4.
Because you're trying to figure out on, say, a $5 in 2027. Thank you, Ben Righteous from Noise. What should it really sell at? I mean, do you think this stock should sell at 20 times earnings? I mean, no. I mean, this is a really great company. It deserves a premium multiple. It's blowing away the revenues. But David, like, if you've ever been to a foundry, I've been to a foundry when they're first starting a new run, and they just throw away a huge amount. And I think that, not that Jensen necessarily got it wrong, but the yields were very low.
Yeah.
So in other words, like when
you know what? Actually, we have him talking about it on the conference call.
Oh,
let's take a listen to what he had to say in particular about that ramping up of production of those new Blackwell chips.
The data center worldwide are in full steam to modernize the entire computing stack with accelerated computing and generative AI. Hopper demand remains strong, and the anticipation for Blackwell is incredible.
Oh, right. I guess that wasn't.
You
really
just can't make them fast enough. You can't. And so there's a hit to gross margins, and that bothered people. But I also think that, David, when you have NVIDIA watch parties out loud, when you have, say, like in the Premier League, you have these teams that Wilf can talk about. I don't know, they're in strange British cities.
Yes.
What happens is that
there's a watch
there you
party.
are. That's a watch party.
What's good is that what they're watching is us.
Well,
as in CNBC. So I'm happy about that.
Right. Well, no, and that is the correct takeaway, of course.
Thank you.
But I do think that plus the National NVIDIA Day and how the nation kind of stopped at a certain point.
Yep. No,
I mean, we have to go back to reality, which is that NVIDIA is a company and Jensen is a man. And they did have some product issues in terms of what I regard as just being, look, we didn't make as many as we'd like. But 2025.
But demand remains unabated.
Right.
Clearly, we've talked about, of course, the continued capex plans of all of the largest companies in the world.
45% of the business is them.
And data center revenues at $26.3 billion. Again, to put it in perspective, you're talking about what is 2.5 times what it was not even that long ago. What
in the whisper? I was out with a prominent
April of 22
semi-executive last night. He said, "Who makes these whispers?" And I said, short sellers who then give it to their compadres on the sell side, so that the number's too high and they have to be $2 billion and they can't, so the stock gets rocked.
Well, let's come back
That's
to multiple. I mean, the one thing, and I'm reading here from Stacy Raskin, who's typically
Stacey
the most significant,
has distinguished himself.
Yes, of analysts in this area. He says the one smudge on the report was end-of-year gross margin outlook.
Right.
Which
Gross
does
margin
seem
problem.
down a bit as Blackwell begins its ramp and
That's
the
true.
H200 mix increases.
That's true.
Although he says he thinks the overall gross margin into the fourth quarter should still be very respectable. I mean, by the way, the gross margins, just look at it as a business.
75.
Step back and just look at this business. 73, 75% operating margins?
They used to try to get to 60% at the height of Intel. They would get to 63% during the period where everyone knew that Intel was the greatest company on earth as a manufacturer. And these guys are blowing that away. They're just blowing it away. Should it get with given that, what do you want to give it, a 25 multiple?
Well, that's my question to you then.
No.
All right. Revenue growth, more or less, at least for the near term, seems unabated. We can have the longer conversation about when the CapEx spending starts to slow or when, frankly, Gen AI is taking in all the data available in all the world and therefore
that's the worry.
You don't need the chips anymore. That's years down the road, perhaps. But right now, revenue growth strong, gross margins, the likes of which we've rarely, if ever, seen. So what's a appropriate multiple for this company?
Okay, so let's say they're going to do it in a calendar year. Let's say they do $5, calendar year 26.
EPS number.
Yes.
Correct.
So give it a 30 multiple.
Right.
Why not?
Why not?
Give it a 30 multiple, and you've got a stock that's down $30 now from where it will be. But now it's become a little more show me, because we now realize that Jensen Huang, in the end, is fallible. We didn't think he was fallible. Now he is. So maybe some people feel like we can't give it that multiple. I don't think that's a big tall order. Give it a 30 multiple on a $5 number. What the hell?
Yeah.
Why not?
Yeah.
But I think, David, we all were kind of surprised to hear that there were yield problems. We kind of felt that it was turnkey. We should never have thought it was turnkey.
It's not easy coming up with a new
this
chip,
is
and
really
they were
difficult.
putting some.
But one of the things that he emphasized over and over and over again is the return on investment is radically great. In other words, you get it and you do really well, because accelerated computing is one part of it, and then the generative AI. And he emphasized accelerated computing. He emphasized the need to replace $1 trillion in current hardware.
In the fourth quarter, they expect to ship several $1 billion in Blackwell revenue.
Yeah,
right?
but people are thinking about tens of billions, so they're not going to get that.
Right.
But when you're
Copper
still
demand strong.
Right, you're still
Shipments
taking over $1
expected to
trillion.
increase in the second half of fiscal year 2025.
And how about the industrial implications? They were very good. The auto was very good. It was not just Meta and not just Amazon and not just Google and not just Microsoft, which, by the way, was mightily attacked on the Mark Benioff call, as we'll get to soon.
Yeah, well, let's get to it now. Let's
Really?
Get to
We're done with NVIDIA?
Well, we're
Do
not.
you want to critique the watch party?
Jim, this is Squawk on the Street. We're never done with NVIDIA.
Thank you.
But we may not mention it for the next 45 seconds.
Okay, that's fair.
Okay. By the way, NVIDIA shares are down less than 2%. Just
Well, there
wanted
was
to point
nothing
that
wrong
out.
with NVIDIA. There was nothing wrong with NVIDIA, other than the fact that they couldn't get the U right.
Right.
And by the way, there was a debate about air cool versus water cool, which was a total sideshow. There was a debate about actual use cases, total sideshow, because he's telling you what the ROI is and how magnificent it is. He gave you every use case. When I spoke to him, David, I said, well, cure cancer. He said, no, but here's what it will do. It will be able to very quickly go through databases and find out what are the genes that commonalities say melanoma, and then be able to work backwards.
There's a hope for generative AI.
Yes.
And I think an expectation almost when it comes to drug development and discovery, it will speed up that dramatically.
He calls that tech bio. And what Jensen said to me, it's still not the big drug companies have not adopted this
No,
yet.
it's still early, Jim.
Right. Well,
as
that's
we all
what I'm
know.
saying. You have multiple
Very
years
early.
ahead of you.
Yes.
And people just continue to think, like a la the watch party, that it was an NFL draft and it was the Giants and they drafted poorly. No, not true. No, I mean true about the Giants. I mean not true about NVIDIA.
Giants, yeah. Well, they got one good offensive lineman a couple of years ago, but otherwise, man, it has not
They
been
have a
great.
good wide receiver.
This year, Neighbor's going to be good.
But I think, David, that the theory of last night is reality, which is that AI is going to begin. ServiceNow, then Salesforce, obviously Meta. He's furiously, Mark Zuckerberg, with Meta AI, which is his GPT, he's furiously trying to catch up to the others. But does he catch and pass it because he has all this data about social media? What are you looking at?
All right, time now for our biggest trending trade. The earnings came down. The fireworks went off. Although the stock was under pressure, there were even viewing parties for NVIDIA's quarterly results. I mean, the business is going gangbusters. Sales more than doubled. If there were to be a quibble point, as they say, sales are going to grow 80%. So I guess that's less than the more than 100% that they were doing. But they talked pretty optimistically about working through some supply constraints around their next generation semiconductor chip. The big question, of course, is what to do with the stock. It's been a high flyer over the year. It's been consolidating recently. Let's put it to a bull, and we'll put it to, I call him a bear, but technically he's got a neutral in the stock. Let's bring in Dan Ives. He's an analyst at Wedbush. He represents the bulls, and Gil Luria, senior software analyst at D.A. Davidson. And Dan, because the stock is under pressure, let's kick it off with you. What did you see in the quarter that you loved, and how do you explain the reaction?
Yeah, and look, under pressure, I think there's a stock that's actually up, over the coming days. Look, this was a masterpiece quarter. I mean, they should print the press release off and put it in the Louvre in terms of what we saw from a demand perspective, the Blackwell delays, that those fears, bark was worse than a bite. And that outlook over the coming years, I think it just sets the bar where the godfather of AI continues to under-promise and over-deliver. I think this is just the start of the AI revolution. A year from now, a $4 trillion market cap.
$4 trillion market cap. Gil, I'll put it to you. And if I recall, your qualms are very rarely with what NVIDIA is doing today. It's more about what's going to happen in the next 3 to 5 quarters.
That's right. NVIDIA's largest customers have said that they're going to buy as many GPUs as they can this year, and they're even inclined to increase their buy next year. But they have at some point to get a return on that investment. Their customers have to get a return on that investment. That is absolutely not happening. What's happening right now is a lot of gamesmanship between these companies. Microsoft, Amazon, Google, and Meta are trying to make sure they're not last to having a lot of data center capacity. They're calling it over-investing. And when you over-invest, that means that at some point down the road, you're going to wind down that investment. And that's what these companies intend to do. And that maybe happen as early as next year. Street expectations are now for NVIDIA to reach $200 billion of revenue in calendar 2026. For that to happen, Microsoft's margins will be eroded by 2, 3, maybe even 4 percentage points. Both Dan and I, who cover Microsoft, have Microsoft's margins declining this year. And that's not something that their shareholders will accept for very much longer.
Dan, your response?
Look, I think what Gil's talking about is really like customers, they need to see the use cases. They need to see the ROI. And no one is doubting about what the demand curve looks like. I think the next phase, and we've talked about it, because this is more than NVIDIA. This is a fourth industrial revolution that's being built out. It's about second, third, fourth derivative plays. And if you look at earnings, you look last night what the Godfather talked about, this is really called the first, second inning of a 9-inning game. $1 trillion of AI CapEx coming out. And look, and I just think fighting that trend, we continue to view it. It's 9 p.m. in the AI party that goes to 4 a.m. And look, Gil's invited to the party. And look, I'm not saying at one point the music doesn't go off. There's glass in the dance floor. It's 9 p.m.
So you dispute this idea that in 3 to 5 quarters, the party's over, Dan?
Look, I think at one point it'll be 4 a.m. and then there could be after parties. But I believe as long as the ROI is there, and not just on the hyperscalers, but even governments, enterprises, as this all starts to take place, this becomes bigger than NVIDIA. This is really the foundation of what I view as the tech bull market over the coming years.
You put that in your note. $1 spent on an NVIDIA chip is an $8 to $10 multiplier across the tech sector. Explain how that works.
Look, and Gil talked about Microsoft. Like, that's really the bigger story, is that you buy an NVIDIA chip, it doesn't stop there. What's the software? What's the hyperscale? What's the use case? What's the infrastructure? That's the multiplier across tech, which is why right now, I mean, it was good to hear from the bears last night for a little, but the bears, they've been in hibernation mode, right, for a few years. And every once in a while they come out. I get worried about it, when I don't see them, but I think that's going to continue to be the trend.
So, Gil, here we have Dan saying you've got this multiplier. The party's going to go on. Another trillion is going to be added to NVIDIA's market cap. What do you say?
First of all, thank you, Dan, for inviting me to the party. Dan has become the voice of this AI revolution. It couldn't have happened to a better guy. What I think is going to happen is a year from now, most of generative AI is actually done on an Apple device or on an Android device, which is to say, not on NVIDIA chips. So the party will certainly go on. AI is just at the very early stages. It's just that NVIDIA will no longer have exclusivity over the hardware upon which AI is happening on. That's our prediction, is that Apple, Google, Amazon, Microsoft will start doing these types of inferences and even much of the training on their own chips. And NVIDIA will have a big market share, but it won't have the entire market, which is what it has now.
I want you to pick up on that point, Dan, that the other hyperscalers that are customers are going to soon become competitors, because it's, same thing. I'm waiting for that to happen with Qualcomm and Apple. So is this a situation that ever manifests? It's a threat, or is it a real threat?
Oh, I think, look, they want more and more share. And I think, look, just like you're going to see Microsoft going after more of the apps, you're going to see all the hyperscalers try to get more of that piece. This is going to be something where tech, it's almost co-opetition that plays out, because it's the biggest tech spending trend we've seen since the start of the internet. And companies not just going to give that out. And look, and that's why I think as this all plays out, it's a broader AI party. I do have a purple sport jacket that I've saved for Gil when he comes to the party.
All right, Gil, what do you think? You think you're going to be wearing that purple sport jacket anytime soon?
I hope so. I hope the party continues. I hope so, because NVIDIA shareholders are our customers. I hope the stock keeps going up. But right now, we prefer Apple and Amazon.
Well, let's talk about that. I think the consensus between both of you is no one is denying that this revolution is taking place and that it's going to be game-changing. And maybe there's a differentiator on how you play that and where you go for that. Let's take a step back. And Dan, I know you said that NVIDIA maybe trades up in the next couple of days. But generally, I wonder if there's some just buyer fatigue, exhaustion of being so over-indexed these stocks. I mean, who doesn't own NVIDIA anymore, right? When there's viewing parties for the earnings, where does the extra buyer come from? Is the rally vulnerable just from that perspective, that there seems to be interest just elsewhere in the market as we come up on rate cuts?
I disagree. I think there's still many that are, I won't call it underweight, but many that have not really participated. NVIDIA is LeBron James in high school. So the point is, this is going to continue to play on. And I think you're going to continue to ultimately see investors, they get more and more proven that this is not hype. This is really the most unparalleled spending that we've ever seen really in our generation, relative to what we're seeing in tech.
Okay, the issue. Why didn't the NVIDIA stock price go up after beating all expectations and giving a stellar forward-looking statement? A common rule. Yes, in general, a company's stock price will tend to increase when its earnings are strong. However, there are other factors that can affect the stock's price, and there is no guarantee that a company will meet investors' expectations. How a company earnings report affects the stock price depends on what investors expect. If earnings are higher than expected, the price will usually increase. And if earnings are lower than expected, the price will usually decrease. Other factors that can affect a stock's price include political issues and economic concerns, market expectations. Even if companies' earnings are positive, its stock price could still fluctuate or even decrease due to market expectations. Investor expectations. A company's stock price may increase even if not making a lot of money, if investors expect the company to be profitable in the future. My analysis of why it didn't follow the common rule. The stock is too popular with investors, retail investors, and is where a considerable amount of retail wealth is being held. You have things like watch parties. You have almost like a cult-like following of NVDA. The fact that it's so popular with retail investors, I think this has become an issue. As we know, the 1%ers of our country control most of the wealth. And the 99%ers are retail investors. And there's no way that they want to allow that many people to get wealthy all of a sudden. That would definitely wreck the system. Number 2, market makers set up a bull trap in the high 135 to 140s and have a considerable amount of retail trapped and don't want them to get out even or with a profit. I believe that to be the fact. I believe a lot of people bought, including myself, I bought some shares in the 130s. And I believe a lot of people, a lot of retail bought in the 130s because there's no reason not to believe that this price wasn't going to go up. They made it look and appear that this price was going to go up to 175, 180. It was climbing. So when it hit the 141 and did a pullback, people bought. I bought in the 130s. There's no reason for it not to go up. So I think they know they got a lot of retail trapped in the 130s. They know we can't sell until we get at least even, that we holding. And they're not going to allow us to get out. I think they're going to keep us right there. What they would like for us to do is to keep dollar cost averaging down lower and get us deeper and deeper in that rabbit hole. So I believe that's another reason why the price didn't go up after earnings. There's no reason in the world why this stock price should not went up above our all-time high of 140, 141. It should have went up. They hit every mark in their earnings. I think there was a reason for the manipulation was to keep this stock price below retail's break-even spot, and I think that's what happened. Number 3, market makers want retail to lead NVIDIA and flock to meme stocks, small cap stocks, and other stocks where manipulation is less obvious and exposed. There's a lot of spotlight on NVIDIA. And when you got a company that is a world beater, that's making all their numbers, all their earnings, they're meeting all the expectations, and they're giving tremendous forward statements of showing that they're going to keep climbing. They're going to keep making more money. They climbing to meet further expectations beyond what they've just done. They're ready to keep going. So I think when you have a company like that, that's a blue chip company, it's harder to manipulate the stock because people ask questions when it just does not make sense. It does not make sense. When a company increased their profit 122% and the stock takes a 8-9% dive, it does not make sense. It does not make sense. But they are determined to get retail to get us out of this stock. So they want us to get into a stock because they depend on retail. They make their money off retail. If retail was not in the stock market, there would be no money to make because they're not making the money off the institutions. If the institutions start losing money, the government is going to get involved with it. They're not going to allow institutions to start losing money. And institutions are the ones that are the 1% playing this game. So I believe what happened was because there are so many people, so many retail investors in NVDA, that they have to try to get most of us out of this stock where they own a majority of the shares. I think that's the plan. And, so I think that's what you have going on. I think that's another reason. That's my third reason why I believe that the stock did not go higher after the earnings call. So now, what do we do? Do we just leave the stock market because it's a scam? What avenues, what are tools out there for us to build wealth on? Well, like the stock market, like paper asset that you can passively build income. Well, there isn't anything else. So we have to learn how to stay in this deal. We have to become investors and not traders. And that's what the mindset you're going to have to take if you're going to stay into NVIDIA. Because it has definitely changed the way I look at NVIDIA. I went into NVIDIA with a game plan of 10x in my money in 5 to 10 years. But that's not going to be the case. And I'm going to go through what I found in my conclusion. My personal strategy to combat manipulation would be to hold my shares long term and lower my expectations from 10x in 5 to 10 years to 2.5x in 5 years and 4x in 10 years. Secondly, I'm going to evaluate my risk tolerance for missed opportunities on other growth stocks and investments and consider trimming my NVIDIA position to deploy those funds into less retail investors, popular growth stocks, away from the attention of market makers. So what I'm saying in that conclusion is I'm going to look for some object, look for some stock, look for some places where it's not so heavily focused with retail investors. I'm going to look for those stocks, those things that's more heavily owned by institutions. They're not going to look, the stock may not look sexy. It may not be that popular. You know, it may be a energy stock or something like that that's stable, maybe a little slower growth, but that's going to give me a better, my goal is to do better than S&P 500. So that's my goal. So that's the second thing I'm going to do is find me a less shinier object to go invest in. Number 3 Invest less in single stocks and more in ETFs, where it's more difficult to manipulate the stock of multiple companies all at once. Okay. What I'm saying in that one is I'm going to invest more into ETFs. You know, as we have seen what's going on in NVDA, we've seen in other stocks. Even when Google hit all their expectations, the stock still went down. I'm going to steer away from these single stock investments. I'm going to keep some of them, but I'm going to kind of stay away from them if I can with any large amounts of investments. The reason why manipulation is so rampant now in the stock market. I mean, it's like it's on steroids the last 5 or 10 years. Ever since GME, AMC, Mullen Automotive, they have gotten ridiculous with the manipulation. And the SEC Commission, they turn a blind eye to the dark pools and those things that happen. They're not going to regulate this. They're not going to do it. They're going to let the market makers do whatever they do. And I'm convinced they're going to do that, and I'm okay with it. I just got to learn the game. And so in doing that, we have to start becoming investors and not traders. Traders are not going to make it. And so to do that, I'm going to invest in ETFs where there are a group of companies inside the ETF. They can't go in like an SP 500, SPLG, FTC. They can't go in and manipulate 500 companies all at once. They can't do that. You know, they're not going to do that. So I'm going to start putting my money in those type of things, invest in that. I think it's safer because as we know now, and I say in the title, the stock market is a scam. I believe it's a scam, but it's a scam that you can win at if you focus. But it's definitely, when I say a scam, it's not fair in a definition that they allow a true supply and demand take place in the market. That is not happening. Supply and demand is not dictating the price on shares. 100% that's not occurring. So that's what I'm saying there. Number 4, the fourth thing I'm going to do is invest more into income producing real estate. Okay. And if you have real estate that's not income producing, you need to start figuring out a way to make it into an income producing land or property. If it's wooded land, consider doing hunting leases. If there are wildlife on it, consider putting some feeders out on there. And where you attract wildlife and you could lease it out to hunters. If there's also land that's maybe ideal for farmland, farmers will lease your property to farm on it if you're in a farm area with it. Or if it's a piece of property, consider putting a small manufactured home or small travel trailer on there, make it into a Airbnb getaway. You could do that with it. Or consider building a small house on it and rent it out if it's just vacant land. Or consider buying property with homes on it, or buying multi-family units with apartments on it. But find your real estate property that is actually going to produce income. And these are my plans. What I'm going through is what I'm not telling you to do it, but that's what I'm going to do. These are my plans what I'm going to do. This is my answer to the stock market being a scam, in my eyes, in my opinion. This is what I'm going to do to combat that. And number 5, start a scalable business that solves a problem for people with the ability to pay for a solution that requires very little personal time to operate. Okay, sit down and brainstorm. What is it that wealthy people need? Well, a problem that people with money need solving, that they have a problem with, that you can solve. You have to sit down and brainstorm. It could be something small. It could be starting a dog sitting business. It could be something that, anything, doing reviews, doing recommendation service, a referral service. For dog sitting, you can start there. There's so many different avenues out there. But, you sit down and think of something, of a problem. I've got some ideas, some things that I'm going to do, that I'm looking at doing. I'm not going to tell it on here, but I have some ideas. But the key is to find a problem, sit down and brainstorm and think about it. And maybe call some of your friends, just say, hey, look, what problem do you have that annoys you, that you don't have a solution for, that you would pay somebody to figure it out for you, if you could. That's what you need to do, something like that. And then brainstorm from there. So that's what I would do. So, like I say in conclusion, what I'm going to do, I've changed. I'm going to hold my shares long term. I'm no longer looking at a 2 or 3 year play on my NVDA shares. I am now going to hold them. I'm prepared to hold them for 10 years. I've now mentally prepared myself for that. Okay. And secondly, I've lowered my expectations on what my return would be. I see now that the 1%ers is not going to let this thing skyrocket. They're going to keep this thing down low, and they're going to let all the stocks around it grow until retail say, hey, let me get out of this and let me go into something else. So I realize that's what they're going to do. Now the problem is, they got a lot of us trapped in the 130s, and what they want you to do is take the loss and get out. But I'm not going to do that. I'm going to stay where I'm at. I'm going to hold it. I'm just going to put the stock out of my mind, and that I know I have it. Because one thing I do know, this stock is not going to go to zero. And I know, I'm very confident in 10 years that it's going to at least double. And that's great. I know it's going to at least do that. So that's what my plans are. I'm not going to do that. I just lowered my expectations on it, and I've changed my plan on how long to hold this stock from a 3 to 5 year deal. I now know that I'm prepared to hold this stock for 10 years. So I'm just going to put it over there in the corner and let it do its deal, and I'll just look to see what I have in 10 years. And secondly, like I said, I'm going to evaluate what else is out there. I found another object out there that's actually, I believe is going to give me a bigger return in NVIDIA. I know this sounds crazy, because historically, nothing gave bigger returns than NVIDIA, but we have to come to realization that they're not going to let this stock do this anymore. They've decided that's it. Whoever you made your money the first time, from 2016, that's it. They're not gonna let this happen to repeat again. The powers that be have decided that, and that's fine, But there are gonna be a lot of opportunities, a lot of stocks out there that will do it. There's a lot of good things I'm looking at in the energy sector and biotech sector, and there's a lot of other areas, a lot of industries that will also get you to your goals. So that's what I'm going to do. I'm going to look at those things, and like I said, and I'm going to invest in less in single stocks. I probably won't be investing in more single stocks other than what I have in the video. I'm going to hold that. I think that may be the end of single stocks for me. That may be it. Now, I see a few maybe short-term single stocks I would try. If I see a pattern, there are certain stocks out there that have a pattern of going up and down that you can make some scalps in, buy it, hold it for 2 or 3 months. It goes back up and it goes back down. That's cyclical. I don't know if I'm saying that right, but so I probably would do some of that, but that's it. And I'm gonna invest more into real estate. I'm gonna look into that very hard, and see what I can do in real estate. And fifth thing is I'm gonna start some type of scalable business. I'm gonna start something. I'm gonna try something, whatever it may be, and it's gonna be something I'm interested in, something I like doing, something that that's a part of my hobbies. So, since it's something I enjoy, I like, then it's not work to me. So, anyway, I just want to share with you guys, that I'm with you. I know a lot of y'all going through the same thought process as I went through, because it was a real big shocker to me what happened after the earnings call. It was a real shocker to me. But it is what it is. We're not going to give up. And we just have to regroup, change our strategy, and because there's still nothing else out there that's going to get us to a retirement or get us that. It's not perfect, and the government is not going to let them take us to zero, but they're not going to let us get rich quick. It's not going to happen. And they saw something that was horrible for them. They saw, retail investors making 100, 200, 300, 400, 500% on their money. And they like, oh no, we're not gonna let this happen. No, that's for us. So that's why they got us in this yo-yo. They taking money from us going up. They taking money from us going down. And so when you get out of that cycle, just get out of it. Become long-term and hold. And like I said, I'm not buying any more NVDA unless they drop that thing so ridiculous. And if they drop that thing down to $80, then yeah, I might buy some more if it's just a giveaway. But I predict they're not going to do that. I believe they're going to keep it going back and forth. They're going to keep giving us all these tremendous price targets and tell us, oh, it's getting ready to go up. Just buy a little bit more, and we're going to let it go up. Buy a little bit more. Well, I'm not going to fall for it myself. Now, I don't know what you're going to do. You do what's best for you. Like I said, this channel is only a place where, I'm venting what I'm going to do. I'm giving you my thoughts. In no way is this any financial advice. I'm not telling you what to do or suggesting you what to do. I'm just sharing with you my frustration, and I'm just talking out loud what's going through my mindset and some of the information I found in my thought process. And I share with you some videos of some expert analysts that were giving their thoughts. Even they were confused about, there's no reason for it. Then some are facilitating. Some are telling you to go, Tom Jones, he telling you to go to small caps. If they want to get away, go over. See, they get you over the small caps, they can beat you up on small caps, man. I was in small caps and biotechs. They can beat you up over there. So, I'm gonna stay away from the small caps. I'm gonna stay with these big blue chip companies. Stay there. That's what I'm gonna stay right there with them, because I know they're not gonna fail. The Magnificent Seven is not gonna fail. And unfortunately, the CEO, fortunately, not unfortunately, fortunately, the CEO of the video is focused on his product and his craft, and he really loves what he's doing. He's not as crafty or savvy as Elon Musk. They don't mess with Elon Musk. Elon Musk got them a long time ago to stay out of his stock, and they don't go in there and mess with his stock. That's probably, a safer bet, to be honest with you. But like I said, I'm not getting any single stocks in it. I'm not getting into that at all. But just give you an example of it, how they treat different stocks differently. So anyway, that's my plan. That's what I'm gonna do. And I appreciate y'all watching my channel, watching my video. I ask you please consider subscribing to my channel, as I plan to bring more information and to kind of take you on my journey. I got a 10-year journey that I'm trying to get on to get to my promised land, my financial freedom. And I hope that you go on the journey with me, and I'll be covering things I'm going to be looking at, some ETFs, some dividend and growth stocks, everything, including going over when you get at the end of your rainbow, what do you do? Where do you park your money at to get your 6%? We're going to look at treasury bonds. We're going to look at dividend, money markets. We're going to look at all those things on what you need to look at when you get to the end of your rainbow. But anyway, I appreciate you guys. I appreciate you watching my video. And I pray that the power to be that the video goes to the moon. All right. Thank you.